All right, folks, here's today's game plan. First, we're breaking down this week's market data. Why the 10-year Treasury popped from 4.02 to 4.15, and how that pushed up the national mortgage rate average from 6.125 to 6.375. I don't know.
That's right, Manly. And then we're going to show how this market flips between buyers and sellers on a dime, like starting running backs on and off the field.
After that, we'll tackle the myth of perfect timing and explain why fear is costing people more than interest rates.
And then producer Ryan is stepping in as our fortune, Rudy's mentor, and he's going to give us all the guidelines of the buzzwords. And then we're going to jump in with some pep talk for you to charge into the weekend.
You might also hear some chanting in the background throughout our show today. Rudy, 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 Rudy.
And don't forget, hit that like, follow, subscribe button. Don't miss next week's play. We want to cover all the topics that you have as well. So feel free to drop a comment in the comment section. Let us know your thoughts. Let us know what you want us to cover. This show's about making your mortgage clear for you. Clear guidance and understanding.
Yeah, folks, we really do want to hear. We're trying to respond promptly. We want to hear everybody's perspective. Our perspective is one perspective only. We're not trying to force this on everybody's throat. We have an opinion, but we want to hear what you have to say. It helps with everybody for an education standpoint. That's why we're here. In the movie Rudy, you've got a guy too small, too slow, no chance at all. But he doesn't let that stop him. He keeps showing up, practicing, believing, until finally he steps onto the field and makes that play that changes everything.
And that's how today's buyers feel. Rates are too high, prices are too steep, inventory feels thin. Everyone around you says you're never going to make it in this market.
But here's the trap. Every month you wait, fear is making you poorer. You're paying someone else's mortgage, you're missing the appreciation, you're letting leverage slip through your fingers.
Yeah, and the answer isn't waiting for perfect conditions. It's showing up with a plan. It's getting pre-approved. It's structuring your loan the smart way, not the easy way, and playing the long game, just like Rudy. It's not about looking perfect. It's about the heart and strategy behind it.
Yeah. So today, we're going to show you why fear costs you more than interest rates and how to flip that market data into real decisions you can use right now.
You're 5 feet nothing, 100 and nothing, and you got hardly a speck of athletic ability. And you hung in with the best college football team in the land for 2 years. And you're also going to walk out of here with a degree from the University of Notre Dame. In this lifetime, you don't have to prove nothing to nobody except yourself.
Hey, Anthony, take us through the market recap.
Absolutely, Manly. So the scoreboard that we see, the 10-year Treasury yield climbed from 4.02 last week to 4.15. That's 13 ticks. And the national average for the 30-year fixed rate went from 6.125 to 6.375. That's a quarter-point move in just 7 days. That's not the direction that we want to go, but we knew this was going to happen.
In dollars, that means $400,000 loan costs you $70 to $90 more per month than it did last week. Over the year, that's $850 to $1,000 gone. Not because the house changed, but because of the rate movement.
Yeah, I mean, and that's what we called last week in our episode, right, Manly? I mean, we set the Fed's tone. That would basically push the rates up, not down. And it's playing out. I mean, Powell, he called the last cut in insurance, not a pivot. That's cloudy skies, and that where the market listens, and they're saying, hey, if you're not giving us a lot of runway here, we're gonna go defense, and we're not gonna play offense right now until we get some runway in front of us. That's exactly what's happening.
Here's what's driving all of this. The first one is jobs. The Fed is cautious but not panicked. That keeps rates super sticky. The second one is inflation. Tariffs and service costs are very stubborn. And if they say higher for longer, that's hawkish for bad rates. The third one is risk talk, labeling cuts as insurance only, signaling no rapid easing cycle. That keeps the pressure on the MBS, mortgage-backed securities.
Yeah, and the teaching point here is even when treasuries dip, Mortgage rates don't necessarily follow. That's convexity. Lenders keeping the rates higher for longer, so that way everyone's not refinancing at once. It's a cadence. Translation, you won't see the rates, see a one-to-one between Wall Street and mortgage. You're going to see a scattered step, and it's by design.
So here's our advice. If you're an escrow or under contract, whatever terminology you're using, lock. Cloudy skies means upside risk. If your lender offers a float down, grab it. If you're shopping, keep your pre-approval ready. Rate sheets reprice midday and are being, be ready so you can win with your agent. Hey, we also need to coach our clients. Volatility, trends, real shifts come from jobs, inflation data, not just from speeches.
Yeah, that's facts, Manly. I mean, bottom line is the Fed didn't change their tone or the call standard. So, I mean, we're looking at this being sideways to up in the short term. Play smarter in this weather that we've got. The good news is that we're in the one step back phase. We did the 2 steps forward last month when the Feds talked about what they're going to do. Now we did that 1 step back when they actually put in motion what the play that they were doing, and obviously they changed the play slightly, and that caused some tension and some volatility. But we're going to be seeing these rates continue to trend down. So don't think that this is going to be, oh my gosh, this is going to be a tide change that is going to really put us in an ugly spot. It's not. It's par for the course. So do not make this change what you do out there in the market.
This is a 4 to 8 week, period. We're going to feel this up and down, this volatility. We've talked about this ad nauseum. We've done a lot of historical research to make sure we're talking in tune to what actually happens historically. And this is what happens, folks. I'm sorry, but unless the Fed makes a bigger move than what they're anticipating, what they're talking about ahead of time, and they were talking a quarter point, a lot of people were calling for a half, 3/4 point, was never going to happen. They are not panicked. They are taking their own sweet time. So we're going to feel this for a little bit. This too shall pass. Don't panic. Just be prepared. Keep talking with your lender. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it. Hey, folks, it's a buyer's leverage revival. This market feels like a football game with no set lineup. 1 minute, you've got the starters on the field. It's a buyer's market. Rates dip, sellers offer credits, and you feel like you've got the best of the best on your side.
Yeah, that's right. And then the next headline hits and the Fed speaks, and suddenly the starters are gone. It's now a seller's market. The odds are against you, and it feels like you're being benched.
That's the Rudy moment. You're not the starter, but you've still got a shot. Odds are stacked against you, and it doesn't mean the game is over. It means faith, guts, and persistence matter more than ever.
Exactly, Manly. And just like Rudy, buyers need to stay ready at the play. Use seller credits, negotiate smarter, and lean on programs. The starters may not be on the field, but you, Rudy, can still score. All right, Manly, it's now all about rate versus fear. Here's the truth. The real cost is not the rate, it's the fear. Buyers waiting for that magical 4% rate, they're losing thousands every month in rent just in missed equity alone.
But let's talk about why buyers have fear in the first place. It's because they're not getting information from sources they can actually trust. Most headlines are designed to shock. Fear sells. It's a fact. But it doesn't build homes, my friend. It does not build homes.
Exactly. And let's be real. All info is based off of data, but not all data is the same, and it's not all correct. You'll see one number on social media, and then your uncle at a barbecue tells you something completely different. Neither gives you the full picture.
That dang Uncle Joe, he's always talking. Hey, that's why you need a lender who can cut through the noise. Our job isn't to spin you. It's to take the raw data, break it down, and translate it into what it means for you. Let you make decisions based on that. And we can, put some commentary behind it, but we're going to give you the straight tooth.
Yeah, that's why you and I, we really focus on relationships. our clients is a relationship. It's not a transaction. That's the only way that you can convey trust to one another, because it's all about trust. If you trust someone, you know that they don't have an agenda behind their words. So don't let headlines, Twitter threads, Uncle Bob, who hasn't bought a home since the 90s, decide your future. Trust people who can separate fact from fiction, and in this case, fact from fear.
Yeah, love it. Hey, because fear thrives into bad info. Faith is built on good info. And in this market, good info is worth more than a quarter point on your rate.
Some 3 years ago, he came to Notre Dame, and I suppose it's safe to say that his career has been a disappointment.
One of the biggest myths in real estate is that you should wait for the perfect time. Spoiler alert, it does not exist.
Yeah, I mean, market shifts, right? Rates bounce, inventory changes. Winners buy when they're ready, not when CSNBC says the coast is clear.
Rudy didn't wait for the perfect play. He practiced, he prepared, he jumped in when the chance came. That's how buyers need to think, too.
Yeah, you got to trust your gut, right? Especially if it's fourth quarter and it's, fourth and long, and you're like, you know what? It's end. We might as well just end right here. No, you got to dig deep. You got to find your why, and you got to make sure that the data that came to you is giving you the correct info, right? That's the big premise here is, folks, whatever you're bringing into your mind, that's data. And whatever comes out of your mind is info. It's like a conversion machine. But the problem is if you have bad data, you're going to have bad info. So it's all about primary source, understanding where you're getting this info from. Listen, Uncle Bob, he's not a bad guy, but he's probably has a lot of fear and insecurity that now he's now bestowing on you in the form of info. That is not info. That's data that is incorrect.
Yeah, garbage in, garbage out, my friends. You got to pay attention to who your source is. And again, not to pick on Uncle Bob or Uncle Joe or any of those guys who may have done a loan back in 1990. Things are not the same. There's lots of things that move this market. Our big thing that we keep trying to tell people is don't freak out about the interest rate. Don't freak out about the home price. It's the cost of waiting that's killing you all along. And that's really what we're talking about, that deer in the headlights. We've talked about it a bunch of times. Don't sit in the middle of the road trying to make that decision. Don't panic. It's in your best interest. I know that houses are expensive now. Interest rates are higher than they normally have been. That doesn't matter. You sit and keep paying your rent, that money's going out the window, 100% of it. So what's worse, 100% interest or 6.375? You tell me. We're not going to
Yeah, I mean,
3%.
the situation should never define your future. How you react to that situation should define your future. And we can always come here and say, you know what? It's just too hot in the kitchen. The rates are too high. The home prices are too high. There's not enough this, not enough that. And you're going to wake up in 5 years and go, I was in a catatonic state and I was letting fear dictate what I was doing. And now I have nothing to show for it. So trust your gut. Look at the millions of people who bought houses before you. Are they in a better situation or in a worse? They're in a better.
Yeah. People who bought 5 years ago, they're in a better situation.
Yeah.
Did they have a lower interest rate? Yeah. Did their homes appreciate dramatically? Yes, they did. Is that still going to continue to happen? Yes, it is. We're in a buyer's market, not necessarily a buyer's market, but we have way more buyers than we have, properties available to be bought. So there's no bubble that's going to happen here, folks. It's not happening right now. We're not in that market. So all those people that, say, oh, high rates, high prices, bubble around the corner, it's all directing that. We're not in the same situation. Anyway.
I love seeing that because we see that in our thumbnails with other people with podcasts, and they have like a nuclear explosion in the back going, the market's gonna explode. Yeah. And then I look and I see 2023. I'm like, wow, just imagine all the people who listen to that fear mongering and they bought in 2023, they'd be sitting on 15% in appreciation right now. So yeah, just trust but verify.
What's your problem? What's your problem? Last practice of the season, and this asshole thinks it's the Super Bowl.
You just summed up your entire sorry career here in one sentence.
If you had a tenth of the heart of Rudiger, you could have made All-American. As it is, you just went from the third team to the prep team. Go on, get out of here.
It's time for the famous Buzzwords breakdown.
Yeah, that's right, Manly. It's time. And like Rudy had fortune, the stadium worker who gave the truth that was needed, we've got our own fortune. Producer Ryan, take it away.
All right, fellas, let me turn my chair around backwards and sit in like a coach-like fashion. And here is the playbook. One buzzword at a time. You call the shots.
Hold on. Rudy. Here we go.
All right, Anthony, let's start with you. The first term for today is fear premium.
Yeah, that's a good one. That's the hidden tax of waiting. Every rent check is wealth gone. That's 100% interest. When you are paying rent, you are paying for that college kid. You're paying for that Mardi Gras vacation. You're paying for that extra, dessert meal that they buy at the Sizzler or at the Red Lobster. You're basically, you're fueling their future by your fear. That's 100% what's going on there. That check is sailed and that wealth is gone every time you make that rent.
All right, Manley, you're up next. Our next term is buyer leverage.
Ooh, buyer leverage. That's your comeback power. Sellers are offering credits and repairs again, so don't waste it. Don't pass on this opportunity, my friend.
All right, Anthony, prepayment risk.
Yeah, that's why lenders keep the rates sticky when the yields dip. Investors don't want everyone refinancing at once. They show that in their pricing, and it's systematic.
All right, next term is contingency.
Ooh, that's your safety net. Inspections, appraisals, all that kind of stuff. Your financing. We shouldn't skip that stuff unless we have no choice.
And finally today we have rate lock.
Rate lock. That's your shield, right? Lock it to protect your payment. Ask if your lenders offer a float down to see, hey, if I lock it, can I float it down if rates jump, 0.25% or more? So not only do you have your safety net, but you have an insurance policy. So make sure you ask that from your lender.
Simple as that. Know the words, play the game, and you've got a fighting chance.
Rudy. Way to go, Coach.
Hopefully you like all the education that you're getting from Manly and I. Do us a favor and smash that like button, subscribe and follow, and tell all your friends and family about us.
Anthony, guess what time it is? The Mortgage 101 Rate Prediction Tracker. Woohoo! Back in January, we forecasted rates would be between 5.8 and 6.5. That's a big range, with an average of 6.15. Where are we now? National average is about 6.375, a little above our midpoint, but still right in the range. Take it, Andy.
Yeah, let's walk this month by month, Manly. Think of this like game film. Arrows up or arrows down shows us the flow of the season. Starting with January, we're at 6.65. Rates jumped right out the gate. Inflation was sticky. The Fed's tone was cautious. And then we had 6.73 in February, another climb. Strong jobs report kept pressure on the bond market. And then in March, we peaked again at 6.81%. That was the highest of the year. Markets braced for fewer cuts, prices in for longer. But then April came, a reprieve, 6.7, down. Finally, a small dip. Inflation cooled just enough to calm the investors. In May, again, 6.68, dropped down a tick. Another step down because the Treasury yields eased on softer economic data. In June, another tick down. Rates held lower as Feds hinted at patience. It didn't spook the markets. And then in July, it ticked back up to 6.71. Why? Hotter inflation headlines brought volatility back. But then August, we dipped almost to 6.5 at 6.57. Rates dipped because of the weaker job data. And a small window of relief, the gift that kept giving, September dropped down to another low. Year to date, 6.375. Today's number lower than July, but not free falling. The story here is stability, Manly. That's what we're seeing right now, consistently going down.
So what's the info here? After March, rates have been bouncing in a tight sideways band, but we're not in dreamland, 4% territory. We're not going to get there. We're also not racing higher every month, so that's good.
Yeah, I mean, stability means opportunity in my book. You don't win games waiting for perfect conditions. You win by showing up when the Fed and the field is steady. And right now, that's the moment we're in. It's steady. You can get out there and make some plays.
You ready, champ?
I'm ready for this my whole life.
All right, you guys, it's time for our big W, real life big buyer win. Hey, this is our Rudy moment. But this week it came from one of Anthony's clients, an investor for the love of traveling to Kauai with his family. I mean, who wouldn't want to be Anthony's new neighbor? He actually wanted to turn that passion into an investment opportunity. Anthony, tell us what happened.
Yeah, I mean, with rates in the 7s on a standard 30-year fix, the numbers just didn't work for him. Cash flow was upside down and sideways. He wasn't ready to bench the dream. So here's the strategy, and here's what wins. We have sellers offering credits. The loan programs are expanding. We found a play that changed, a 40-year term, not a 30, a 40 at a 6.6 rate. That's the first part of the loan that works. Just like a 30-year, you're paying the same interest. And who's going to keep a loan for years 31 through 40? So this adds cash flow. This lowered his payments, and the number made sense to him. And here's the kicker. He's self-managing it from the mainland due to tech platforms and software. That's saving him 25% on the management fees straight on the bottom line. This is a win both on the terms, on the fees, on the maintenance. He took something that looked like it couldn't happen and made it work because he was ready.
Anthony, that's from a dead deal at 7% to a winning investment at 6.625%. That's playing like Rudy. Guts, persistence, and the right playbook. Had the right coach talking to him the whole time.
Yeah, I mean, he understood that investing is not just a digital game, right? It could be a physical asset in the form of a house. And so a lot of people, they put all their eggs in one basket and just have their 401k or their stock or their crypto. Have a diversified portfolio, specifically with real estate. It's a physical asset. There's multiple streams going on. It is recession proof, and it's not only for short term, but it's for definitely long term.
Hey, folks, let's bring this home. Today, we learned that fear costs more than interest rates, that markets shift like starters running on and off the field, and that good info beats bad headlines every time. We also showed you how creative financing turned a dead deal in Kauai into a winning play.
Yeah, and through it all, the message is very clear. It's a Rudy message. Faith beats fear. Strategy and persistence and the right team matter more than waiting for the perfect timing. This is what it's all about, is strategy and preparation.
So get off the sidelines, step onto the field. You don't need to be perfect. You just need to be out there and play with heart.
That's right, because like Rudy, the scoreboard changes the day you step onto the field.
Rudy. Hey, thanks for watching the Mortgage 101 podcast. Be sure to like, follow, and subscribe. Give us your feedback on what topics would be helpful for you. We're here to make the mortgage world clearer, one episode at a time. Thanks again. If this episode helped you feel more confident about your home buying journey, do us a favor. Share it with a friend, subscribe, leave a review, and if you've got a question or a topic you want us to cover, hit us up with a DM or a comment. Thanks for listening to the Mortgage 101 podcast. We'll see you next time.
Hey, Manley.
Hold on a second. I'm drinking my famous water over here.
Knock, knock.
Anthony, we've talked about this. We're not doing this knock-knock stuff anymore. It's not in the script. We threw it out the window. It's not fun.
It's the most important thing that we're going to do today. Knock, knock.
Atlanta. Who is there?
Rudy.
Rudy who?
Rudy or not, the market's playing, and it's your turn to suit up.
Oh, boy. Way to bring it home to our Rudy. I love it. Rudy. Rudy.
Rudy.
Rudy. Rudy. If you guys are liking all the information you're getting from us, if you're feeling that we're educating you, please smash that like button, subscribe, DM us with any thoughts or ideas for our show, and also tell your friends and family about it.